Okay, thank you. Good morning, everybody. It's great to be here. I'm going to tell you a bit about my approach, and hopefully, we'll have time to go through many charts. Please do type in whatever symbols you'd like to look at, and I'll give you my interpretation of those charts. Tell you what I'm seeing and what I'm looking at. But really looking forward to it. Thank you. All right, we've already got a couple symbols. Please, again, let's make this as interactive as possible. Let me know what you want to look at, any time frame. My style is very basic. It is uh, strictly on technical analysis. I rarely use fundamentals, etc. I just take my signals off the chart. What you're seeing on my chart here is our victory system that will point out buys and sells, etc. We can talk a bit more about that while we go through this, but basically it is based on trend and momentum. What I try to do is identify a strong trend, and I use the 20 period simple moving average, which is the blue line here, to judge momentum. And the way I do that is based on slope. If it is sloping higher, that means there's upward momentum. If it is sloping lower, there's downward momentum. And if there's a period where the market is consolidating, what you'll normally see is a flat 20. And we want to stay away from those areas as much as possible. All right. The other thing I do is like to confirm what I'm seeing on a chart or the trend on a chart on multiple time frames. So I trade mostly off the daily time frame. So what I will always do is look at the weekly and the monthly as well, and make sure that the trend there is in the same direction as what I'm seeing on the daily. If you are say trading on a 5 minute time frame, then I would check the 15-minute and the hourly, for example. Always two higher time frames than what you're looking at. If you're more of an investor and are using just monthly charts, then that's fine. I don't think you have to look at anything further than that. So, okay. So I'm just going to quickly review the index charts here, the Dow, the S&P, the NASDAQ, and the Russell. I always like to look at what the market's doing overall, and then we're going to get to your symbols. I see a number of them here. They're great. Okay, so we'll start with the Dow. And, obviously, if we're starting from the higher time frame looking back, all of these charts are going to look very bullish right now. We've been in an upward trend for a while. And if you look at the monthly here on the Dow, yes, the past couple months we've been just kind of back and forth um, in a range, but overall we're well above the 20. You can see that we're trending from bottom left, top right. That is exactly what you want to see on a chart if you're trending to the upside. It is very clean. One tip I will give you is that when the market is trending very strongly, like it was back here, like it was back here, what you'll notice is the bars, the price bars, are all very similar in size, and volume is steady, right? Very similar in size, steady. When you start seeing bigger bars, wider bars from low to high, and very erratic behavior, back and forth kind of behavior, that's volatility. That's when there's some sort of uncertainty in the market. And those are the periods that you want to try to avoid. Now, you can use them to your advantage by keeping track of that consolidation. Let's look at this area in here, for example, this area, right? We want to track it. And the best thing to do is when you notice that we're in a consolidation mode is mark the highs, right? And mark the lows and wait for a break one way or the other. And so when we had that break here, that was a great opportunity again to take advantage of the next trend. But if you notice the bars now recently here, even on a monthly, and the monthly is the smoothest time frame, but even on the monthly, you'll notice that they're much wider from low to high than they were back in here and here. So there's been a lot going on in the markets. But, looking at the monthly across the board here, they look pretty good. Um, when we look at the weekly charts here's the Dow. All right, we've had this potential double top, but it's also an opportunity. If we come up and break this high, right, then we're off and running. If we look at the S&P again, we've been consolidating for weeks. The Nasdaq, we've been consolidating Here the high and the low. So we mark that, and then we look for a break one way or the other. And the only other thing we want to make sure of is if we break out, regardless of which direction we break, we want to make sure that there's a clear road ahead. So for here, on the NASDAQ, if we break out of the highs, we're into new all-time highs. There's no activity overhead whatsoever. So we have a wide open road for this to move. If we break below, there is going to be some activity or some support below. And one of the things that you can use to judge how much activity there is there or how much support or resistance is to use the volume by price. This looks at the amount of volume transacted at any specific price level, right? So if we break down here, you'll notice that right around in here below 19,000, between 17.5 and 19,000, there's a bit more support than there is immediately underneath this low. So we will have some room to go at least down to 19, right? Or so. So those are the kind of things you want to look at. And the only other tip I'll give you here is the longer the consolidation lasts, the bigger the move that will happen coming out of it. So rather than being frustrated while waiting for this move, you should be excited and hope that this lasts for a very long time. The longer it lasts, when it breaks, the bigger the move. And that's what we're really interested in. So again, I look for trend, I look for momentum, and I start with the higher time frame and move backwards. And then I take my entries off the daily chart, which we're looking at now. And this is the chart of the NASDAQ, right? 100. And you can see it's been in a very defined channel for many weeks here. And we're very close to the highs. If we can break out, and the way I would judge a breakout is we need to see a close above there and then a move above the high of that candle. So we want to not only close outside of it, we want to make sure that we are moving in that direction, which is what we call follow through. And so if we close there and follow through, we're off and running. And, to try to guess how far this can go, even when there's an open road ahead, we measure the channel. So from where the channel started to where the breakout point is, right? That's a similar amount of a move that we should see in that direction. You can also use your fib extension tool here, where you can look back and you want to identify the most recent high and the most recent low, and draw your fib extension tool there. And here, what we'd be looking for is the 1272 extension, the 1618 extension. Let me move this out of the way if I can. There we go. So these would be your targets. So if we break out of this channel, which is roughly around the 22,000 level, we'd be looking for a move to 23,000 and then 23.7 and eventually, closer to 26,000. That's what we would be looking for using the fib tool. But we are yet to see that. So let's continue to follow it. So let's take a look at a few symbols here. The first one, it was a reef with Vale, V-A-L-E. Let's look at V-A-L-E. And please, if there's a specific time frame that you want to look at, let me know. Otherwise, I'll just go through what I'm seeing here. So when I see a chart that's been trending lower here, breaking down like this, what I'm really looking for is some signal that this has bottomed, right? I mean, of course, if it's trending like this and I'm getting sell setups, I'm going to be shorting this or buying puts on this along the way down. But if I'm trying to spot a turning point where we could start looking for long positions again, at a minimum, we need to see some kind of bottoming formation here. And it could be a chart pattern. It could be a simple cross of the moving average, but this is what I would look for. So on this chart, what I notice here on the daily is that we have a bit of an inverse, we have an inverse head and shoulders pattern, right? Shoulder, head, shoulder. What you look for when you have this for confirmation is you try to find the highest point between the two shoulders, right? Which would be up here. So when we broke this level here, this high, and had follow through, that's when we could say this had bottomed. Another thing we can look for is not only a cross of the moving average. That is not good enough. As you can see, we crossed here and we failed. We crossed here and we failed. What you want to make sure of is that you cross and then you either take out a prior high or you retest that 20, meaning you come back and this time the 20 is acting as support. And when you bounce off it and come up and take out that high, now you know that you're moving in the next direction. All right. So if you were trading off the one time frame, I'd say this is great. We can start adding long positions and targeting these prior highs as targets. It's very simple. You don't need to make it complicated. You can look for areas of resistance overhead or look for previous pivot highs, one here, one here, one here, to target as it moves forward. Now, you'll notice that my ribbons down here are both red. These are the ribbons of the two higher time frames, so the weekly and the monthly, right? Now, the fact that they're still red means that price is still below the 20. Let me show you. Here it is. So on the weekly, we're still in a downtrend. We have not bottomed, right? On the monthly, we're still in a downtrend, nor have we bottomed. So it is a little early for me to want to buy Vail. I need to make sure that all three time frames are aligned. It is too early for that. We only have one time frame that's trending higher. The other two are still trending lower. So what I would actually look for here, I'd go back to the daily and hope that this collapses here and closes back below the 20 and gives us a sell signal. Then all three time frames would be aligned to the downside and we could short this, okay? But if you're looking for a long, it is a little early here on Vail. Raju wanted DocuSign. Let's have a look at DocuSign. This is an interesting setup here. So, we were in a nice strong uptrend on the daily, right? We had an earnings announcement, gapped up. It never did follow through on that high. That's not a good sign. We start pulling back, and now we move below the 20. We make an attempt to get above. We fail. We kind of go sideways here. We break out back above, but really there's no follow through. We failed to get back to a prior high, and now we roll back over. Now what we're really in danger of is clearing this prior low here. So if we move below, like whenever you move to the other side of the moving average, you want to look at a prior pivot low if you're moving below it, or a prior pivot high if you're moving above. Clearing one of those is further confirmation that yes, you are moving in that direction. So if we were to close below this low here, right around 87.25, we then look for some kind of support. And again, we could use a prior pivot, which would be this one here, right around 80, okay? Or you use the volume by price. And here you can see that there's more support right around 69. I'm going to round it to 70, okay? So if this breaks here, this 87 area, we're bound to go to 70. So that's about a 17-point move right here. Now, do the higher time frames align? Right now, they're still green. They do not. But let's see how close they are. There we go. So the weekly is testing this right now, and the monthly is well above the 20. So actually now, when I look at the monthly and the weekly, this is pretty exciting here. We had this very lengthy channel down here, this bottoming formation that we broke out of. We closed above there, we followed through. So I think we're on our way higher, and there's really no overhead resistance here at all. There's not enough at all here. So again, if we mark the length of this channel, right, from the start to the breakout point, we should have a move similar in size, which should at least take us to this level here that we had marked. Okay. Now we look at the weekly and it confirms that. So if this bounces here and gives us a long setup, I'd be interested in that. But we would need to see the daily back above the 20 again. So if this holds support and bounces, when it moves back above the 20 here, starts to slope higher, we're good to go to the long side on DocuSign. That's the way I read that one. NVIDIA. Um, NVIDIA is interesting just because of, the mess here from last November. November, December, and January was all in here, all this mess. Okay. Um, and now that it came back all the way down to this trend line, bounced, and now has moved back above the 20. But there's this group here of activity that could act as resistance on the way up. And so that's the only concern. First of all, yes, we're above the 20, but we have no slope. Slope is against us here. We want slope in our favor. And we have this bit of overhead resistance. So once we get to 146, we can even call it 145 here. I like to round to whole numbers. That's when the road will open up for us. So we're still at 133. If you're more aggressive and you really want to push it, or you want to play this on a lower time frame, you can. But I would personally wait till we clear 145, even 150. And above there, it'd be wide open and we'd be off and running. If we look at the weekly chart, we're still below the 20 here. We haven't quite made it back above. Okay. And the monthly, it looks pretty good right now. So the path of least resistance is higher, no question. And that's the direction we'd prefer to trade in. But there's going to be a bit of overhead resistance here. So I'd rather be patient with this one. TLT, great symbol. We don't often talk about bonds, or we don't talk about bonds enough. This is the ETF for the 20-year Treasury. And as you can see, it's been dropping. And I drew a line here across the pivot highs, the recent pivot highs. And if you look on the daily chart, when this crossed the 20, it came back to retest it and held, and then took out this high. So at that point, we could say, hey, we've bottomed on the daily, we're moving higher. Now, a higher time frame, still not aligned. The weekly, still sitting below the 20, still looks like a good short here. Same with the monthly, right? Now, maybe we had a double bottom here. It still hasn't been confirmed, but it's early, okay? So at a minimum here, if it holds this and bounces, taking out every new pivot high. So if it comes back and takes out that high, that is bullish. Again, not bullish enough for me, since all three time frames are not aligned yet. I'd like to see all three time frames align, but it's a step in the right direction. And if you're more aggressive, and that's one way to play this. Just a close outside of this trend line with follow through on the high of the bar that closed there is a good sign. Remember, in order for the higher time frames to align, you have to at least get the lower time frame to change direction first, right? So if you're looking at daily, weekly, monthly, the daily is always going to be the first one to roll, then the weekly, then the monthly, right? So if you're more aggressive, you don't want to wait until all three come into play. You at least need confirmation that this is moving in the direction that you're trading it. So look for something like a prior high or a break of a trend line or something like that, right? All right. What's next? AMLX. This is from Barb. And then she had a second one, AMDL. Let's have a look at that here. Oh, nice clean chart. This is one of the things that I look for. When you bring it up, you want a chart that's easy to read, right? You want to be able to decide if this is trending higher or trending lower or just moving sideways in a split second as soon as you look at a chart. If you have to spend some time trying to figure out, is this an uptrend? Is it a downtrend? Is there no trend? If you have to work to figure that out, it's probably a chart that's too messy to trade. And the reason why I say that is when things are just kind of, bouncing all over the place, you're at very high risk of getting stopped out, regardless of which direction you're trading. So you want to trade something that's clean and predictable. So this one, beautiful uptrend here. Then it pulled back, closed below the 20, tried to recover once, failed, tried to recover twice, failed, took out that low, accelerated lower. Very, very typical, basic technical analysis. This is exactly how you want to read it. And now we come down and we hit a couple of prior highs. We find some support. We start to consolidate. We break back above. We fail. We break back above. Now we're retesting it. So it looks like it may bounce here. One clear sign that we have held that 20 is if we can break this prior high. So if we can get above here, above $4, then we should be on our way higher. Okay. Now let's look at the higher time frame, see if they show us anything else. The weekly still below the 20 again, so it's a little early, right? But we've been building a healthy base here. Okay. Notice how we did move above, came back, could not hold it. We moved back below. Now, if we close above, either we take out this high or we retest that 20 again. We pulled back, but this time we hold it and bounce. Okay. Whenever you're in a trend, up or down, crosses of that moving average are very common. But what you have to confirm is that it holds, right? Because if it goes up, fails, holds up, fails, it's still a continuation of that move. You want to make sure that it retests it and holds it. So here, for example, we're moving lower. We crossed it to the upside. We came back and look at that. It held. Boom. We exploded and we continued higher. That's exactly what you want to see. All right. Now, the other one was AMDL. All right, great. So let's see. Another one that's fairly clean here to the downside. Nice, strong downtrend here. Whenever you see one of the ribbons that are gray, it means there isn't enough history here, not enough bars to actually paint the indicator on that time frame, which this one is the monthly. But on the daily, we're trending lower. On the weekly, we're red. We're trending lower. Let's have a look at it. There it is, right? And what else do you notice here? We are near the all-time low. So the previous week's bar, last week's bar here, the low at 571 is the all-time low. What that means is below here, there is absolutely no support whatsoever. So if it breaks that low, it should have an easy time continuing to go lower. So one of two things is likely to happen here. It is most likely to continue going lower. Why? We have a very strong trend here. We have what we call a falling knife, meaning it hasn't even made an attempt to get back to the 20 and test it. It's just continued a straight line down, right? We know there's no support here. And if you look at the slope on that 20, it's pretty dramatic. So, that means there's a lot of momentum, a lot of selling that way. The other thing that you want to keep an eye on when you're trying to decide if this is going to continue lower or not is you can look at volume. So if volume is steady, yeah, that means it should continue on. If you get a spike in volume, if you start to get a lot more volume coming in, it could be that buyers are now stepping in, right? But the only way you're going to know that is if price stops going lower. So in other words, if we had this spike and this bar closed more or less where the previous bar closed, for example, or slightly higher, then you could start to think, hey, maybe people are looking at this price point and thinking this is a good valuation. I want to jump in here, and buyers are stepping in. But if it continues to drop while you're seeing heavier volume, it just means that selling is accelerating, and this is more likely to go lower. So this is likely to continue going lower. So any move back to the 20 here and a roll back over like we saw here, you want to short, right? So notice how throughout here, we move to the 20, we fail, and it continued. Move to the 20, failed, continued, move 20, failed, continued. etc. Until you get a move to the 20 above, come back and hold the 20 and bounce. Then you know you've changed direction. Okay. Too early for this one. CFLT. Klaus, let's see. All right. So we had a nice trend, broke it here, came back, retested, failed. There we go. Downtrend. Now we do the reverse. And now here we go. So the thing that my eyes go to immediately on the daily chart of these highs, if we can come back and take out these highs, we should continue higher. All right. We also have the weekly, the monthly in line, which means maybe this was the prior high. Let's see. Nope, there are further highs. So we're not at all-time highs. Ooh, this gets even more interesting. I like this. So I would look at this line here. Now you might ask, why am I drawing the line here? And I should fix this actually. Let me just fix this line. There we go. Why am I drawing the line here versus the high here? You can absolutely draw a line at this high here. But if you look at the number of times this level was touched here and here and here and here, this is a much stronger area of resistance. So if we can come up and close above 35, above this line, we should be off and running. Now, the fact that there's a prior high here means we've got an overhead target. So if we get in at 35, we can take a little bit off at 40, right? In case that acts as resistance. But if it breaks above 40, I'd really want to buy more for a move higher. Again, you can look at volume by price, but you could see that above this level, above 35, not above 40, look at all the volume here in this area compared to above 35, right? So this is your true area, your true line in the sand that you want to watch. So, and look how long this consolidation has been going on for. We can draw a line across the lows and call this a channel, right? But we're going back to the summer of 2022, July, August of 2022. We're now in February of 2025. So this is going on almost 3 years. Once we break, we could easily get back to the all-time highs here. So what I would do is set an alert at 35, and if this closes above there and follows through, then I start looking for long trades. Very exciting chart here. Tesla. Let's look at Tesla. Marsha wanted to look at Tesla. So Tesla, this is a position I took recently. This is what we call a descending triangle, where you have a series of lower highs, but you have a series of lows at the same level. What you're looking for here is a break of these lows. So on the break of these lows, when we close below here, I went short, and it's been working out great so far. And what I see is that there isn't a lot of support until we get down to the 260 area, right in here, right? So we could actually continue to fall to 260 here, and then we would reevaluate. But now, I should clarify something, that as you can see, you may have noticed that the ribbons, the weekly is green now, but the monthly is still, sorry, the weekly is red now, but the monthly is still green, right? So this wasn't a typical trade for me. If I was shorting, of course, I'd want all 3 time frames aligned. But what I've been reading lately is that with Elon Musk's position in the new administration and so on, sales of Tesla around the world have been dropping. That's what I've been reading. So what I actually did was I didn't actually short Tesla here. I went to TSLQ, which is the 2X short ETF for Tesla. Okay.
Hey Vince,
Hey, yes.
sorry, I gotta cut you off there.
Oh, I'm so sorry. I didn't even check the time. I apologize.
Do you want me to post this link for you that you sent me?
Sure. Yeah.
Okay.
Yeah. That'd be great. Thank you so much.
Yeah.
I apologize for not getting to everyone's symbols. The time went really fast, but I
No,
appreciate you
yeah.
having me on, David.
Yeah, it's like a lightning round kind of thing.
Yeah. Thank you.
But yeah, great analysis.